So now for today's strategy session. Now this year's market volatility mirroring what we saw at the start of last year. And according to our next guest, each sell-off then offered investors a rewarding entry point. Joining us now is Adam Johnson. He's Bullseye American Ingenuity Fund portfolio manager. Adam, it's great to have you here.
Likewise.
At the desk. So is that going to be the case this time around too, you think?
Yeah, and I think that's what we're seeing today. It's amazing to think that over the previous 10 sessions, the NASDAQ was down almost 10%, right? I mean, just day after day, and I kept looking at my screen and saying, yep, we're down again. And yet, that's exactly what we saw on 3 occasions last year. Each was a wonderful buying opportunity. In the moment, it never feels good, and I get calls from clients and they say, I mean, is this it? Is it over? No, it's not over. Nvidia, actually, as much as the NASDAQ went down last year 3 times, Nvidia went down even more, 30%. 3 times, and each time it came back. So I think you have to take the long view.
And so a lot of people have taken that long view, and long Mag 7 is the most overcrowded trade we know right now, essentially over the past 2 years. So where else are there opportunities to maybe outperform, especially knowing the pullback that we've seen in some of those overcrowded trades?
Well, I think what you're getting at is something that was impressed upon me by an early mentor. And he would ask every time someone went to interview with him, he would ask one question. And the question was, how do you make the most amount of money on Wall Street? And the answer that got you the job was find a theme and leverage it. AI is the most powerful theme in the market right now. We're all talking about it. I don't have to explain to you or to anybody why it matters, right? Just as every company became an e-commerce company 15 years ago and then a cloud company 10 years ago, now every company is becoming an AI company. So leveraging that theme is a very powerful way to make money. Nvidia became the obvious one. Stock's up tenfold because earnings are up tenfold. And then you start thinking about what AI requires. Data centers. Again, something we're all talking about. So you could actually put together an entire portfolio just around data centers. GE Vernova, ticker GE, which uses nat gas to produce electricity on site. That powers the data centers. Sterling Infrastructure, STRL, actually builds the data center themselves. Supermicro, a company we've been talking about that got crushed, now trading at 10 or 11 times earnings. They assemble the AI infrastructure that you need to actually become that AI company that they all want to be. So, if you want to talk about where to go that's outside the Mag 7 but still kind of related, I'd go to AI and data centers.
Adam, how should investors be thinking about that valuation aspect to this? Because I think that is a huge question, especially when it comes to some of these AI names. And obviously, it's a very stock pickers type of market right now, as many would argue. But clearly, that story and that narrative changes depending on who you're talking about.
Well, the way I think about it is the price you pay for the growth you get. So, for example, you can buy the S&P 500. It's trading 21 times earnings, and you get 12% growth. Okay, fair point. That's our sort of benchmark. Well, you could go out and buy Nvidia, trades at 30 times. You say, oh, that's a lot more than 21. Yeah, but it's growing at 60%. Supermicro, trading at 10 or 11 times earnings, growing at 60%. So you say to yourself, well, what am I willing to pay for the growth I'm getting? By contrast, Palantir, which I will not touch, I wish I had at $8, I didn't, now trades at somewhere around 180 times earnings. Really? With 15% growth? So you're gonna pay however many more times that is than the S&P 500, 7 or 8 times more than what you'd pay for the S&P 500 for marginally more growth? That doesn't make any sense to me.
Where do you think is the state of the growth narrative for companies right now, especially knowing that with the amount of the earnings season we've moved through, the revisions, and it's not atypical to see in the first quarter revisions to some of the full year outlooks, but we've gotten more revisions to the downside than normal, even during this period.
Yeah, we have, and yet the growth that companies put up in the fourth quarter was 12%. Actually, I think 12.3. And the margins, critically, profit margins were 13%. That combo, 12.3% growth, 13% profit margins, that's the best we've seen since 2021. That acceleration coming out of COVID. And while, yes, you're right, guidance has disappointed some, I would say, that's a fair characterization. We're still talking about 13% growth, which is better than the 12.3. So, it's very popular to sound skeptical. Bears always sound smarter than bulls. People just assume that the bears see something that the rest of us don't. But in this case, I don't agree with that. Just take it at face value, don't overthink it. Market down 10%, on the heels of 12.3% growth with 13% growth likely for the next reporting season, buy it.
Yeah. No Bears or Bulls on this desk, just Eagles, ultimately. Adam, thanks so much.
Oh, thanks for having me.
Thank you.
Good to see you.